$86 billion in revenue, but I think a lot of people are focused on that ad revenue, which came in a little bit light.
Yeah, and when you look at the split of that ad revenue, it's really the search part that appears to be weak. I mean, the reason for that is obvious. There is impact from, GPT and Amazon and all this kind of searches that are popping up. I think the cookie deprecation, which is going to happen in 2024, is also having an impact because you could see how that will affect Google's network line. So they report that separately. It's a $9 billion run rate. And that's where you are seeing the core search business, which has 50% incremental margin. And they beat on the margin side. So it wasn't weakness on the margin side, but the ad top line seems to be weak. And I think that's what's driving this.
And that has implications for other companies that rely on the ad market too, like Snap and Meta, which are weaker in after-hours trading as well. What's notable to me is that heading into this earnings report, the ad spending market was the part of the business that people were really optimistic on. So this seems a little bit of a surprise. People were taken aback by this.
Yeah, well, we saw an inflection in terms of ad pricing last quarter. So remember, we had 6 quarters of negative ad pricing for pretty much all the digital ad companies. Last quarter we thought there was an inflection, but it looks like in Google's case, it's a question of volume and impressions growth, not ad pricing. Google still has the best ad pricing, but volume is getting hurt by GPT and all these alternatives that are coming up. And YouTube, I think subscriptions outperformed, but on the ad side, it was in line with consensus. So we didn't see that big of an upside.
And Mandeep, I am curious about the cost side of this story here. All these big tech companies so far, we've heard about cost-cutting plans, whether it's shutting down divisions, getting rid of jobs, or just finding a way to tighten the belt. Are we going to see more of that out of Alphabet?
I think so. And you see that already in their margins. Margins did exceed expectations. And I would call out cloud margins. Actually, cloud margins came out almost $400 million more than consensus. The reason for that is all the GenAI workloads are expensive to run. So it's going to hurt the search margins, but it's a benefit to the cloud margins because a lot of the workloads are getting deployed on their cloud. So you will see that accelerated ramp on the cloud side, but clearly search is the cash cow, and if the margins are getting hurt, it will have a bigger impact on the overall business.
Search is the cash cow, and search kind of disappointed in the 4th quarter. Google Cloud revenue did beat analyst estimates, unlike the previous quarter where Google Cloud was kind of the disappointment that dragged the stock lower. What do you need to hear? What do investors need to hear from the company when it comes to the cloud business to kind of restore their faith that Google is continuing to gain market share on Microsoft, on Amazon?
Yeah, I mean, it's the smallest player in terms of the size when you compare to Amazon and Microsoft. And you want to see acceleration from this point on. You're right. Last quarter, we saw a dip, sequential deceleration. But the acceleration we saw should continue, and they want proof points around that.